Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Hello, everybody, and welcome. This is the Caribbean Business Review. My name is Joseph Cox, and indeed, today we have a bit of interesting developments here at the program as we are joined by communication specialist and broadcaster Claudine Lloyd, and Claudine will be taking us through our Market Watch and Global Pulse segments. And we welcome Claudine to the program and know that she will bring immense value to this platform. Now, as we go on throughout the program today, we'll be looking at, for example, we'll be having our CBR briefing, where this week we'll be looking at the quote, really, free movement by design, but for whom? Because that's coming against the backdrop of the recent announcement coming out of the CARICOM Heads of Government meeting, where they said 4 countries will be adopting full free movement as at October 1st, 2025. So we're exploring that mode. Our special guest today will be Mr. David Mullings, and Mr. David Mullings is the chairman and CEO of Blue Mahoe Holdings Incorporated, and we'll be looking at basically our Caribbean investment landscape to see whether or not we're fit for purpose, and indeed, are we living up to the ideal that it is the new frontier for investment? So we'll be going through those issues and those segments on the program. But before we transition to our first segment, I want to just raise just 2 issues that I found really interesting. First of all, it seems as if the trade war is back on. Was it ever off? Not even sure anymore. But as at the weekend, Canada was being threatened with a 35% tariff. Now it's the EU and Mexico who are being threatened with 30% tariffs. One wonders, frankly, if that means that the MCA is dead, is dying, is on life support. I'm not even sure anymore. But what it does say, and also indicates, is that there are also threats, and this might affect us even more so at home sooner than later, is that there are threats to up the blanket tariff, the base tariff. Now, right now, most of the Caribbean has been placed with given a 10% tariff, but that seemingly is on offer to be increased. So there we go with that. There's also the issue of the visa fees, the immigration fees, which are going to create some discomfort within this market. So, for example, ordinary visitor visas fee will be going up from you currently pay, what is it, $185, and there'll be a $250 visa integrity fee that has been added. So the total will be $435. So those are some of the issues that are coming up. Of course, one could not overlook the story coming out of the CPSO, the CARICOM Private Sector Organization, that the region is up to lose about $540 million a year US coming out of the tariffs. And of course, that the tariffs and the trade dynamic is our complete moving target. So one is not even clear how long those estimates can hold, or whether or not you have to increase them further. So this is a really uncertain period. One would hope that there is some end game to all of this, because I don't know that from a policy, from an economic policy standpoint, from a business planning standpoint, that this uncertainty and this erratic policy framework can inure to anyone's benefit. But I suppose more on these things as we continue to go through our program today, which we hope you'll find quite useful as you plan your week ahead. So that's it from me at this point in time. So we'll take a quick break and we'll be right back with the CBR briefing just after this. Welcome to the CBR briefing, your concise, clear-eyed snapshot of what matters most in Caribbean business, economics, and public policy. I am Joseph Cox. At the recently concluded 49th meeting of the CARICOM Conference of Heads of Government in Jamaica, it was announced that as at October 1st, 2025, four CARICOM member states, Barbados, Belize, Dominica, and St. Vincent and the Grenadines, will be effecting full free movement. This has been posited as an incremental success story. Indeed, CARICOM proclaims the right of free movement, yet in practice it is delivered through selective permissions, procedural barriers, and political hesitation. Free in theory, selective in practice, and most troubling of all, exclusionary by design. Nowhere is this contradiction more stark than in the ongoing exclusion of Haiti, a full member state of the Caribbean community since 2002. More than 20 years later, Haitian citizens still do not enjoy the right to live and work freely across CARICOM. Notwithstanding current challenges, there is no administrative framework, no dedicated timeline, and frankly, no political urgency to correct this. This isn't a case of technical delay. It's a structural omission, one that exposes a deeper problem. Caribbean integration has become comfortable with symbolism over substance. Recent announcements about expanding the list of approved skill categories seem to signal progress. But let's be clear, these expansions are, in effect, a distraction. They offer more rights to the already included while maintaining silence on the systematically excluded. This approach repackages inertia as advancement while masking the core issue of structural inequality. Instead, the bloc continues to build an architecture that preserves borders under the guise of tearing them down. What else could explain the 5 to 7 year exemption granted to Ghana in deference to their local content legislation? And behind this inertia lies something more corrosive: xenophobia. This has created a two-tiered CARICOM, one for the mobile, credentialed, and welcome, another for the marginalized, especially Haitians who remained effectively stateless within their own community. What we are witnessing is a region more comfortable with the performance of integration than its practice. If you want proof that full free movement is possible in the Caribbean, look no further than the OECS. Their integration isn't aspirational, it's operational. Under the revised Treaty of Basseterre, OECS citizens enjoy the unfettered right to live, work, establish businesses, and access public services across member states without the need for skill certificates or labor market tests. This is integration in practice, functioning, tested, and quietly transformative. Yet here's a contradiction. The OECS countries are also members of CARICOM. That means citizens of Antigua and Barbuda, Dominica, Grenada, St. Lucia, St. Kitts and Nevis, and St. Vincent and the Grenadines enjoy full rights within each other's borders, but not across CARICOM, despite the CSME purporting to guarantee the same. No skill certificate, no red tape. This is where the most favored nation principle becomes relevant. Under Article 8 of the revised Treaty of Chaguaramas, member states agreed not to accord treatment to third parties that is more favorable than that accorded to other CARICOM members. The implication is clear. If OECS member states grant full free movement to each other, those privileges should, by logic and treaty, extend to all CARICOM nationals. Yet in practice, this is not the case. The full rights exercised within the OECS remain confined to a sub-regional bloc, not extended to CARICOM as a whole. This creates a layered regionalism where geography, not citizenship, determines freedom. It's an internal border within the borderless vision. This contradiction further weakens the legitimacy of CARICOM's integration agenda. It reveals that full mobility is not only possible, but already exists. What's missing is the political courage to extend that model outward, especially towards states like Haiti. So while CARICOM expands its list of skills categories in pursuit of incremental movement, the OECS quietly demonstrates that complete open migration is administratively feasible, socially manageable, and economically beneficial. The question then becomes, if the OECS can do it, why can't CARICOM? The answer increasingly is not capacity, it's choice. And as long as that choice excludes the poorest and the most historically marginalized, the CARICOM project remains incomplete by intention and not by accident. A truly integrated Caribbean cannot be built on policy choreography that rewards compliance while concealing discrimination. Nor can we advance regionalism by entrenching categories that serve to stratify, not unify, our citizens. Until CARICOM is willing to confront this truth and the discriminatory logic that sustains it, the dream of a true single market and economy will remain just that, a dream. Regionalism without equity is not integration, it's regional elitism. And the longer we ignore this truth, the further we drift from the founding promise of CARICOM that we are one Caribbean, one people moving forward together.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Welcome back, everybody. This is Caribbean Business Review. My name is Joseph Cox, and today we are very pleased to welcome Mr. David Mullings. Now, David is the CEO, the founder, CEO, and chairman of Blue Mahoe Holdings, as well as, of course, Blue Mahoe Capital. But in this regard, when we're looking at Blue Mahoe Holdings, Blue Mahoe Holdings is a private investment firm, among other things. Now, it strikes me, David, as I welcome you to this program. I mean, two things. For the rest of us, we might look at what's happening in the US as being somewhat unorthodox. Let me use polite language. But for an investment firm, I suspect that you may have a slightly different take on these things, because these erratic to us, seemingly erratic policies, etc., what I see for you is opportunity.
Exactly. We've heard, well, thank you for having me first of all, Joseph. I would say that we've heard, I don't know how true it is, but we've heard that the Chinese symbol for crisis is the same symbol as opportunity. So we're some people see crisis and get scared. Some of us see opportunity and we get excited. We are rubbing our hands, patiently waiting, because we've evaluated where we wanted to invest and are waiting for the right time to get in. And Warren Buffett would say, be greedy when others are fearful, be fearful when others are greedy. So we are very greedy right now when the majority of people are fearful.
But nonetheless, I mean, because given what we're seeing now, and I mean, I'm guided by one of your quotes that you reference, even in your public, what should I say, disclosures. And we have your quote Winston Churchill, which says, success is not final, failure is not fatal, it's the courage to continue that counts. Now, David, frankly, you really have to have a lot of courage now. I mean, you're looking at a world in which every day is a new geopolitical conflict in whatever form or shape that it takes. You have issues in terms of some of the capital markets. Well, you will benefit from if you're dependent on your stance, but you have uncertainties in the capital markets. Interest rates, the U.S. economy, largest economy in the world, is clearly softening. But at the same time, you are saying to me and others that from your perspective, the Caribbean represents the next investment frontier. I don't get it. I mean,
I love that.
we have a lot of opportunities, sure, but why the Caribbean? What is it that would direct your attention to the Caribbean vis-a-vis more developed markets with more developed capital structures, etc.?
Yeah, man. No, so I love that. So imagine that this is a year and a half ago, I was on stage for a fireside chat with the Greenwich Economic Forum, Miami edition. And this gentleman is saying to me, well, why should we invest in the Caribbean? We have all these wealthy families, institutional investors here. Why should we come to this small market? Isn't it risky? And I said, wow, how you define risk is what matters. So I say, you look at risk differently from me. First of all, we're thinking long term. So I'm not thinking 3 years, 5 years, or election cycles. We're thinking 20 years old. We're thinking generationally. So I said, let's take away the timeline, though. I said, if I was to say to you in January of this year, that at the end of January, that time, right? That there's a country that you should look at investing in, but they did not have the peaceful transfer of power after the election. In fact, one candidate said elections were stolen, and there were people who rushed into their parliament or their building and said, if I told you that, you would think it was a country in Latin America, the Caribbean, or Africa, some emerging market, a banana republic. And they laughed. And I said, if I told you that there was a country whose debt to GDP ratio continues to grow unsustainably, and they're actually passing tax to fund them with more debt and add to that deficit, you would assume it was a country in Latin America, the Caribbean, or Africa. I said, the difference is that Jamaica in October of 2023 was actually upgraded by Moody's because that reduces debt to GDP ratio from 147, 144% down to 72% and put into law that it had to go to 60%. And they were upgraded in that October. 1 month later, the United States was downgraded by Moody's. So you talk about risk, and I'm showing you where there's actually less risk. It is riskier to invest in the United States. And the place started applauding because they had never thought about it that way. So that's the first thing you have to look at, risk from that standpoint. But the second thing is that you have to plan for where the growth is going to come from. So another Winston Churchill quote is, failure to plan is planning to fail.
To fail, right.
If you plan, right, if you can plan where something is going, you plan based on some prediction. And I'm going to have multiple predictions. I want to have some scenarios. So scenario planning makes sense. So here are the things that you would want to look for to invest in somewhere. These are the three things that should get you excited about investing in a region, in a country, in an industry. Number one, perception must be different from reality. So the Caribbean is perceived as small islands, which means small returns. But we all know the reality. Billions of US dollars are being made. So that's the first one. The second one is that inefficiencies must be present. Why we inefficient, man? We want to improve efficiency. But you cannot make money in a perfectly efficient market. We need some inefficiency to make something there. And then we can actually capture more growth in terms of economic growth. And a piece of that comes to the balance sheet by improving efficiency. So that's number two. And finally, there has to be a lack of equity capital flowing into that region, that industry, that country. The Caribbean, Africa, we know is a lot of debt capital coming in. But when you bring equity capital to the table, it's hugged and loved and treated special because debt is so expensive. So those three things get us excited. So obviously, that already separates the global south from the global north, the US, Canada, Europe. But then now let's look for what matters in terms of the boxes that we really want to check. Number one, it needs to be capital friendly. When I put my money in there, I need to be able to get back my money. So that's the first one. Caribbean is pretty safe with that. So I want that. I want stable democracies. I think we have that in the region. So that's number two. And that's everywhere else. So they are the same without changing those things. You want to have a young and growing working age population. Is the population young, working age, Canada in the US? Jamaica obviously has some issues with declining birth rate, but overall, the global south, emerging economies, the next growth, the next 3 billion people come from Latin America, Caribbean, Africa, Southeast Asia, the global south. So that's number one. That's like green check mark, red check mark for global north. But then another one you want to look at, you want a high savings rate. You want them to have money, low debt, high savings rate so they can spend in that economy. Oh, have you seen what debt looks like in the United States? That's not a net positive saving for people. So that's two strikes. Well, let's keep going. You know what else I want? I want to see democratization of wealth. I want to see more companies being listed and taken public. I want to see government privatizing things that the private sector then go and list it so more people can participate in the growth of the economy as these businesses make money. So it's not families keeping it to themselves, it's spreading. So you look at the Jamaica stock market, the junior exchange in particular, India was happening the same thing 20 years ago. How many listed companies are in America today in 2025 versus 2005? Far fewer, with far fewer IPOs. So we're not seeing it happen over there. Again, red X, green check mark for the Caribbean, green check mark for Latin America, green check mark for Africa. So the global south, developing economies continue to that. And then lastly, you actually want real GDP growth. The United States has been stagnant. The global north has been stagnant. The growth of 5%, 8%, 10% is coming from Latin America and the Caribbean, Ghana, for example. It's coming from Africa. It's coming from Southeast Asia. So if I'm going to invest for the next 50 years, because that's what we're trying to do, where am I going to invest? The ones with the red X's or the ones with the green check mark? Massive opportunity.
No, your point is taken, but you see what I'm also then going to ask you is as we are now, and I don't know you're looking long term, but as we are now, do the countries of the Caribbean, and does the private sector have the absorptive capacity to really take advantage, let me put it this way, of the investments that can endure from your kind of intervention?
So that comes down to mindset first. If we have private sector companies that are run by people who believe everything should be sold to the United States, Canada, and Europe and the UK, then no, we're going to have a problem. Those companies are going to struggle. If the companies are led by management teams who know here's where the growth is coming from, right? Their per capita incomes are growing, their median wages are growing, their economies are growing. Let us go over there, then we will do it. You look at Grace Kennedy, for example. Yes, Grace Kennedy, 1.6 billion US in revenue, Jamaican headquarters, they're in 55 countries. They've entered Ghana. They're looking to get into more African markets. So they're not just trying to get into Walmart. They're not just trying to get into Target. They are trying to get into the global south as well. They get it. And that is more of what we need. We need to be thinking bigger. We need to be thinking our peers, who else is similar to us, they have the same problem. We can then go and bring our solutions from here to them. We can find solutions over there and bring them here. We need to exchange people, we need to exchange knowledge, and we need to have trade facilitated easier. And that is it. It's easier for us to get to North America or the UK than to get to Africa, even though we have more cultural similarities with Africa. That has to change. But that's a mindset issue, right? This is a Marcus Garvey problem. Emancipate yourself from mental slavery,
Mental
don't want
slavery.
those can fear back.
No, quite so, but you see, I have to raise it within this context because it strikes me that, for example, in the Caribbean, pretty much, I'm looking at the Caribbean as a whole, we are pretty much within a 5 to 8 hour flight radius of a market of 500 million. But, so I take a point in terms of North America or United States in particular. But what I don't get is what are the impediments? I mean, you're coming in, you're interacting with investors, you're interacting with the market. What are the impediments that, for example, would hinder us developing a viable nearshoring marketplace? What is it that is hindering the expansion? I mean, yes, Guyana is expanding on into South America. Belize is looking more to Central America and so on because they're a kind of bridge state. But to be honest with you, when you look at it, you see the alliances coming between the Jamaicas, the DAMREP, etc. But I'm not seeing this massive push towards broadening and deepening our market. So from you are an investor looking on, you are seeing the opportunities. What is it from your perspective that is hindering that type of expansion?
Well, we said it is literally mental slavery. It's about mindset. If you think of Jamaica as a market of 2.7 million, then you're wrong. We have how much 30 odd million tourists coming through the region. How many people per year over 3 million tourists coming into Jamaica alone, stopover visitors. Those are additional to our market. Everybody who likes Jamaican culture is part of our target market. So we have to learn to think bigger, think broad. That's number one. Number two, we do have to recognize that one hand can't clap, and Jamaica is one hand. CARICOM, we need a block. The European Union has proven that when you get a block together, you have better trade deals, and you can figure out from an economies of scale standpoint and efficiency, right? Comparative advantage. Guyana is going to be better for growing rice, for example. Trinidad has oil, no Guyana has oil, so manufacturing is probably going to be cheaper over there, right? Bahamas, really good at insurance. Cayman, really good at investment management. So we can actually specialize. Jamaica should be the logistics hub for the Western Hemisphere, based on our location from the Panama Canal, based on the history of Port Royal, based on the seventh largest naturally protected harbor in the world. Everything around shipping and logistics should be based here. So it comes down to vision and then action, because we have a problem with action in Jamaica. We had Vision 2030. It might as well name Vision 2050 at this point. Right? It's a joke. We went through all of this to this, all these things, how we can grow, what we need to do, and then we don't follow it. Like many plans in Jamaica, they sit on a shelf somewhere gathering dust. So everything we need to grow Jamaica, for example, has been written down, has been studied, has been restudied. It's political will that is required. And we have not had leadership that say, yeah, man, Jamaica is going to partner with CARICOM. And instead of causing the whole 1 from 10, leave none with the West Indies Federation, we're going to work with our brothers and sisters. That's why Barbados has Afrexim Bank HQ breakground and building there. That's why Afrexim Bank hold their event in Bahamas. They're thinking regionally and then thinking globally across emerging countries. Michael Manley was essentially the leader of the non-aligned movement, the leader of the third world. Jamaica has given up that position, right? We were the first country to jump up and say, hey, apartheid? Yeah, man, we have boycott South Africa. We have given up our position and leadership, and people are surprised. They're shocked when I go anywhere. Oh, Jamaica's so silent. Oh, you're not going with nothing. You look about your Talawa. What happened? So leadership has been a problem. Political will doesn't exist to actually change the thing. So it's going to be upon the private sector. So, you know, I don't need to wait on the government of the day, whichever political party, to see the light. Put the money into it and go build it, or we'll go to a different country and do it somewhere. Somebody that is more regionalist and who understands that one hand can't clap.
No, indeed. But you say part of the dynamic that we're also facing, and I hear you on that, is that because, all right, fine, one hand can't clap, but the fact of life is, do we have the basic infrastructure to treat with some of the issues? So, for example, throughout the region, our main telecommunications providers, they keep saying there is no business case for the introduction of 5G. All right, we hear you on that. Now, the reality of life is that with the 5G and that sort of intervention comes things like AI. If you notice, New York is now talking about nuclear plants, massive nuclear plants, to try and treat with the increased demand
Energy.
for electricity that comes with artificial intelligence, etc., etc. David, frankly speaking, I am afraid that we in the Caribbean are going to get left way behind while we sit down and fight all these battles. And we're looking, therefore, from your perspective, because you are facilitating, you're looking to drive investments in the region. How feasible is it for you to get people, for example, from third countries now to look favorably on our region to bring in solutions that can really propel us into the next generation, as far as I'm concerned?
So as far as I'm concerned, it's very feasible. You bring them here first and then they're blown away. Oh, I didn't know Jamaica had this. I didn't know Barbados had that. I didn't know this company was here in Bahamas. So again, perception. We have to change their perception. So we have to go to them and show them that we need to bring them and have them experience these countries, experience these cultures, and recognize, wow, here is some massive opportunity. I didn't think about you guys as a location. They had this resort, this store. It was only sun, sea, sand, and in our case, music and printed. We have to do a better job of promoting brand Jamaica, brand Caribbean, and what is already happening here, so that they can now understand what they could do more of. And that's why I keep talking about the Singapore of the Western Hemisphere. And some people don't like when I bring up that, but I show what the four Asian tigers had done, South Korea, Hong Kong, and so on. We can do that in the Caribbean as well. There's a blueprint. There are role model countries. We can get their recipes. We can tweak them with our Caribbean spice, our island flavor, and then we can do something. We can leapfrog. But first, you have to believe it. In my opinion, it's easier to believe it if you recognize we had done it already. Right in the 1500s, Port Royal and one other city were the two wealthiest English-speaking cities in the world, in the Western Hemisphere. Port Royal and Boston, Massachusetts. And at one point, Jamaica exported some 44% of all the refined sugar in Jamaica, in the world. Banana was green gold. So when we think about those things, we have been there before. There was a reason why we were considered one of the crowns, right? Crown jewels in the British Empire. Over there, they had India. Over here, you have the Caribbean, Jamaica in particular. What can we learn from why they saw us as being important? What advantages we have? Have we forgotten? So when you look at Lee Kuan Yew in his book From Third World to First, talking about how they did what they did after coming from a British colonial system who was part of a federation who then got independence in the early 1960s with a population of less than 3 million people, large natural protected harbor next door to a very large trading partner. Because that's all like Jamaica too. What did they do different? He came to Jamaica twice. He talked about in his book in the 70s. He had to say, wow, look at all this hinterland they have. They have to import fresh fruits and vegetables and water. We have rivers and mountains and all this agricultural farming land. And he said, their culture, theirs was a culture of song and dance. They drank copiously and danced vigorously. Hard work they had left behind with slavery. That is what he says in the book about us. That's what somebody else outside who has grown their economy and provided for 2 generations, transformed the trajectory of a tiny
Yep.
island.
Yeah, but yeah, I hear you on that, but this still doesn't really treat with the issue because where we are now.
We need to want to be globally competitive. So we have to start by saying that this is not good enough. We need to do better and we can do better. In fact, we have done better before. What went wrong? We have to have an honest assessment first. Where are we today? Where do we want to get to? Who has gotten there before? How did they do it? Can we do any of those things? And it's in Vision 2030. We don't want honest assessments of ourselves. We don't want to be compared to other countries. But you have to. You have to benchmark against the best. That's what you do in business. That's what you do in manufacturing. You benchmark, you hold yourself accountable, you measure what matters. But we don't do that.
Interesting thought. So, from your vantage point, what are the sectors in this region, right across the region? What are the sectors that really scream for real investment with the potential of excellent returns from your vantage point?
That's a super easy thing. You can go back and look at the four Asian tigers and how they grew, and then you can look at India 25 years ago. Same exact industry they're going to need to invest in because we're behind all of them. It's the same industry. So whether it's financial services, you're going to talk about ICT, so communication technology, shipping and logistics, manufacturing, agribusiness, and moving up the value chain. It's all the same things. They all did it already. There's nothing new. Export-led growth is not something that is new. There are textbooks that we can go and get from an Econ 101 class that will tell us which industry we need to invest in first, and then they build on top of that. The foundation has to be strong. So obviously, we need to have an educated workforce that has increased productivity. Jamaica's productivity growth versus Trinidad and Barbados since 1980 is atrocious. Right? We're looking at our outcomes for exams, it's atrocious. But we feel good that we have a 1% improvement or a 3% improvement. But look at the illiteracy rate. Look at the numeracy rate. It has been done. I keep trying to tell the people we don't need to reinvent the wheel and it's not rocket science. I can give my 12-year-old a book that would show how these countries grew, and he'll be able to apply the same thing to Jamaica. It is really not rocket science, but we don't want to learn from other countries. We don't think if Rwanda can go through a civil war that they went through, and be where they are today, what excuse do we have?
No, but then, David, I will say to you, in all seriousness, United States, yes, had a civil war, 1776 around that times, right? But the fact of life is that they don't seem to have learned anything. So one wonders if
Most
what's
of them, right?
going
Yeah,
on.
the war of independence, they had a civil war over slavery. So yeah, but we're not worried about them. That's not, I know
No,
like
no,
we're not going
I
to use
get
them
you.
once as a role model, not once.
No,
I
no,
said,
man, I
look at
get
the
you.
four Asian tigers, look at India.
Yeah,
That's
no,
how we
I
go.
get you. I get you on that. But the other thing that I want to look at is because earlier you know in reference on building the case for the Caribbean as your investment vision starts to unfold. One of the things that struck me and is simply this that yes, by and large we don't have the kind of restrictive environments, capital environments that some people envision. But the truth of it is that in terms of we do have capital controls in a number of the Caribbean countries, which creates a challenge. There is no question about that.
Well, is
In
it a
terms
challenge
of
in some cases, though, or if I have fixed exchange rates, is that an advantage? Bahamas certainly doesn't have a challenge with their controls. It's an advantage to know that my US dollar is worth this, and in 10 years it's still worth this. Barbados, that's actually an advantage. Jamaica would love to have US dollars not be at 161 to 1 today versus last year it was 155.
yeah, but but when you have, for example, in the case of Trinidad, case of Barbados, these
But
currencies,
Trinidad
frankly
does,
speaking, are
but
overvalued.
Trinidad doesn't have a fixed exchange rate. So how do you solve that problem when you have a cash flow?
Trust me, it's a
Capital
very
control.
thin
So
managed float. It moves between
capital
676
controls
and
have never.
680.
I know, but capital controls have never solved that problem, right? The problem is that you have an overvalued currency. Why do you have an overvalued currency? Okay, well then solve it. First thing you need to do is actually sell at the right price. You have to devalue the currency or increase the value of your
Agreed.
currency.
Agreed, but the political no, and that's fine and wonderful. But what I'm saying to you is that the political dynamic that obtains isn't what is going to prohibit that. So I'm asking you, therefore, from the perspective of an investor, or does that alter your decision in any at all, or how do you
So
grapple with those issues?
before, so I learned something in my MBA class, pest analysis. Most people know about SWOT, strengths, weaknesses, opportunities, and
Right, right.
threats. We need to also do a pest analysis at the country level, right? What's the political situation, right? We're talking about energy, we're talking about social, right? So energy, environmental, social, and technology. So a pest analysis. So
No,
I
but then
don't invest
David,
in Trinidad.
no, but David, no,
I don't
but
invest in
yeah, but I
Trinidad.
hear you. But you don't just stop at pest. You go to pest still because you need to look at the legal and legislative thing and the environment.
I get it. Well, I start with those four alone can decide if I go into a country or not. So if you do not have leaders who have the political will to do what is best for growing the economy, then why am I going to go down there and do business? I needed to be honest and willing to grow it. If you are focused on simply winning the next election, it's not my kind of people. I need to be able to invest beyond 5 years. I am investing for 20 years. Is this somewhere that I'm willing to put my money for 20 years? 20 years? And how confident am I that I'll be able to get my US dollars out of that country when I need to get paid dividends? I'm not worried about that in Jamaica. I'm not worried about that in Guyana. I'm not worried about that in Bahamas. I'm not worried about that in Barbados. I am worried about that in Trinidad. So I do invest in Trinidad. I don't have to. I get to pick where I invest. And if that ever become a problem in one of the countries I named, then I will exit. That's how
Yeah.
investors think. Money is fungible. We can go anywhere. Patriotism doesn't pay the bills. I don't invest in Jamaica just because I'm Jamaican.
All right. Well, let me answer because we're running out of time. But let me answer some rapid questions. Because one, company structures. Do we have throughout the region? Do we have the requisite flexibility in terms of the company structures that are available? And what would you like to see bumped up?
Well, Jamaica is already working on that. Barbados is working on legislation as well around fund management companies, around venture capital investment companies. Jamaica is introducing laws to have LLCs, limited liability companies, just like in the United States. So in the US, you have LLCs, limited liability companies. You have S corps and you have C corps versus just sole traders. So we need to have more flexibility in terms of the type of entity is able to set up. We need to make it easier for them to open a bank account for that entity, begin to trade business and transact and collect money, pay employees, and so forth. But it is coming. Jamaica and Barbados in particular already have legislation in the draft phase. So I'm excited about it.
All right. Also, from where you sit now, what is it that the investors want now, or how many have been coming to the table now, given what has been happening? We see all the uncertainties around the world. So, I mean, for example, European Union is seeing some trade deflection, which has stuff that was rooted for the United States now ends up in Europe. Are we seeing similar shifts for the Caribbean? Are we seeing similar interests?
Yes. So nearshoring is picking up speed even more. We already had this transition happening in BPO before from India to the Caribbean and Latin America. Now that has sped up in terms of where can I manufacture or assemble, how can we get some local inputs to bring down, for example, how much of it is coming from China, for example. So nearshoring is becoming a big opportunity, and we see that. But obviously, there is a focus for us that's unique. We are focused on diaspora direct investment. I am not trying to get money from a general public. I am focused on only raising money from people of Caribbean heritage who live in the US now will move to Canada and the UK after we list on NASDAQ. So our diaspora investors always wanted to invest back home because it was their goal to move back home to either live or then retire, right? They want to live and work or retire. So they are seeing even more reason to bring their money down here and invest now. They really prefer real estate to start, right? Tangible things. The majority of people are raising from are retail investors, not accredited investors. So the odds are that they have never bought a stock in their entire lives. They were taught to invest in real estate to create wealth. They weren't taught to invest in the stock market or invest in private companies. It's going to take time to get them to realize, no, you need to be investing in the market as well. So we'll give them what they need while educating them. There's a big shift to move capital down here and come back home earlier.
No, I hear you on that. The next question I have for you is, do you, from where you sit, do you genuinely see as any scope for the development of a commodities market? Meaning now where we start to trade. I think in the initial stages, my own thought process would be that you link up with one of these commodities exchanges in, the United States, for argument's sake, until you get the sufficient scale. But do you see that as a viable option for us over the medium to longer term?
It is a viable option. It's not something I pay attention to much. I do invest in commodities. I've never studied how to invest in commodities. So for me, it's really neither here nor there for me. I am focused on company. I deal with investing in profitable existing businesses, domiciled in strong long-term growth industries with capable management. And I want to own them for as long as they stay great companies.
Well, all right. And therefore, it comes right back now. We come full circle to Blue Mahoe Holdings. You are an investing firm. I call it, you reach into several industries. Globally, where do you see the growth coming from over the next, 5 to 10 years? And what industries do you see actually, speaking, disappearing almost over the same time period?
Oh, I love that. So we don't want to invest in the disappearing one. So for example, you could get me to invest in a sugar factory in the Caribbean, right? And that I don't see that continuing. So we're not globally competitive in that space. So in terms of where we are excited to invest, one is obviously ICT. Anything in digital transformation is a massive opportunity. And that includes fintech, right? So digital transformation, big opportunity for us. So that's one. The second one that we see as a big opportunity is climate resilient housing, right? As your populations increase their income, they need housing. So there's a massive demand for affordable housing in the Caribbean. So that's number two that we really like. Number three is financial services. Financial services typically grows faster than the economic growth, the GDP growth of our country. And as we digitize payments, we think there's going to be a massive opportunity. You have more money, means that you need to invest more money, you need more mortgages, you need more business loans. So we're investing in that space. Shipping and logistics, we see as a huge boom, especially for the Caribbean and going between the Caribbean and Africa. And then the last one that we see, well, two others is energy, right? There's a transition to carbon neutral or zero carbon, right? Clean energy. So we see an opportunity in that space. Healthcare, obviously, we have baby boomers, 10 million a year in the US retiring. They're living longer, which means that there's a higher incidence of cancer, right? I'm a survivor. I can relate to that. We need to treat things differently. There has to be disruption in it. The way we treat cancer is 100 years old. In my case, I had to cut out the tumor. Right? That's what you used to do 200 years ago. There has to be something. Chemo is poisoning the entire body and killing the healthy
Yeah.
cells. Thanks to things like CRISPR and technology, we can do targeted radionuclide therapy. So again, healthcare is going to change. The way we get treated 10 years from now is not the way that our grandparents were treated 30 years ago. So
But
those
David,
sort
yeah, I'm hearing you on that, but we want to go back to the issue of the energy because there's something I heard which really, really, it just struck me that, for example, US, and I'm sure, well, Germany will be starting to see some movements towards certain things already, but the emphasis seems to be not on renewable energy. This is what fascinates me. Not on renewable energy. The emphasis is on nuclear, natural gas, and coal. Now, if you are looking, as I referenced earlier, to put in substantial investments to facilitate AI and other industries over time, these are not, these are 5-year strategies. You or therefore end up with a scenario of either you invest in these things and they end up with stranded assets down the line, very untoward
when
environment.
those stranded assets can exist in the energy space. We need energy. And as we add 3 billion people to the global population, we're going to need even more energy, especially in the developing world. So I can't see how energy could ever be a stranded asset unless it was fossil fuels and carbon intensive. So those could end up being stranded assets in the world that we live in. Right now in the US, you can't pay attention to their energy policy because Republicans are in power and they deny climate change. Nobody in the Caribbean denies climate change. It's
You
impossible.
can't.
Yeah, we don't argue with anybody. We don't have time to argue with idiot because that's what it is. It's stupid. Nobody in Florida believes climate change doing this. What they might argue about is are we the cause? So when you think about energy, right now we have a system that's designed around one thing in the hub, which is fossil fuel, carbon intensive. And then from that, you have solar, wind, wave, all
Yeah.
these other things. Because those are intermittent. You need something that's always on and energy dense. That's what I'm saying. I cannot run a factory on solar. I would have to go and get batteries. I can't run a factory on wind. I'm going to have to get batteries to store the power. And the battery technology is not there as yet. It will get there, but we're not there as yet. So you need to replace something that's energy dense and always on, but dirty with something that's energy dense, always on, and clean. Well, that's nuclear. You're not going to build giant nuclear reactors and everybody's scared about and having a 3 Mile Island or a Fukushima disaster. That's not what they're doing. Think about a nuclear sub. How does a nuclear submarine run? It has a small modular reactor, SMR. Well, what if you could build that in a factory? And I can just put a SMR or small MMR and just have them coming off a factory chain, economies of scale, and then take that and stick it beside the factory. We could plug that into the grid, right? Far smaller risk of a nuclear meltdown, self-contained. We see thorium reactors in China. So the technology is going to get there. The first thing is that we have to have the will as a population or as a people, right? Humanity as a civilization that we can't keep pumping CO2 into the atmosphere like we've been doing in the past because we're going to kill ourselves. The planet will still be here. We're going then. So once you decide you're not doing that, what are the ways to do it? Because we still need the energy. The solution is not to turn off the light and turn up the thermostat and wear a sweater, like what Jimmy Carter said in the 70s. That is not the solution. In fact, we in the global south are so far behind, it's not fair that we are going to have to say, you know what, why we can't have the same luxuries. I shouldn't have a fridge because you over there went and got all the nice things and pump all this up in the air and killing all of us. So what I would say is that it's interesting. The people most affected by climate change are the furthest from the capital to solve it. The capital we have needs to focus on solutions and not pollution.
Yeah. All right. And that's where we have to end it. David Mullins, thank you so much for here for this conversation. It really has been a pleasure. I do appreciate you, sir. So, David, as I say, continue to enjoy the uncertainty in the States. Make as much money as possible because trust me, I have never seen such an erratic environment in this life. So thanks much.
All empires fall. So learn
Let's
from
see.
that.
All right. Good. Thanks so much.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
From economic shifts to digital pivots, this is Market Watch, your 4-minute Caribbean business briefing. I am Claudine Lloyd. Let's take a closer look, starting in the Bahamas. The Bahamas is considering a move away from its US dollar peg to a basket of currencies. Prime Minister Philip Davis also proposed a CARICOM Africa digital trade currency, supported by recent success in testing the regional CPAS platform with Afri-Exim Bank. In other developments, inflation fell 0.1% in April, driven by easing food prices, utilities, and fuel. Meanwhile, Cygnus and IDB Invest are proposing a $10 million factoring facility for Bahamian SMEs, targeting government receivables to improve liquidity. Jamaica's net international reserves dipped slightly to US $5.8 billion in June, while its monetary base expanded by 17 billion Jamaican dollars, signaling tightening conditions. Airbnb visits to Jamaica surged to 800,000 in 2024, earning US $32 million and representing nearly 1/5 of total arrivals. Policymakers are now weighing regulatory responses. At the same time, the Fair Trading Commission is urging reform of Jamaica's fragmented credit reporting system. With only 2 active bureaus and rising complaints, the FTC says a centralized system could cut costs and boost financial access. In the Cayman Islands, inflation stood at 1.8% in the first quarter, driven by rising education, food, and transport costs. Yet, beneath the surface, job growth has disproportionately favored non-Caymanians. Of 800 new jobs, fewer than 100 went to locals. Underemployment among Caymanians has also tripled. Cayman also posted a trade deficit of $1.5 billion on $1.65 billion in imports, an 8% rise from 2023. Bermuda is teaming up with Grenada to launch the world's first cross-border digital healthcare credentialing platform, developed in partnership with fintech firm Aperion. But social insurance arrears remains a concern. Over 1,700 employers are behind on contributions, affecting 7,475 workers, roughly 21% of the national workforce in Bermuda. On the corporate side of things, Digicel is shutting down Loop News and Sportsmax, pivoting towards enterprise services, including cloud, cybersecurity, and compliance, under its Digicel Business and Simtai brands. Meanwhile, Hess Corporation has exited Suriname's Block 59, citing high drilling risk. No wells were ever drilled despite significant seismic investment. We now turn to the regional news. The ECCB will launch a new Office of Finance Conduct and Inclusion to tackle rising bank fees and improve consumer protection. Some intra-Caribbean transfers now attract fees of up to $65. The CARICOM private sector organization warns that new U.S. tariffs could cost the region over $542 million annually. Jamaica faces an 8.6% hit to key exports, while Trinidad, Haiti, Guyana, and the Bahamas are also exposed. CPSO is calling for a new CBI plus trade framework. CARICOM is also moving ahead with full free movement by October 1 for nationals of Barbados, Belize, Dominica, and St. Vincent. Guyana will retain a 5 to 7 year exemption in the oil and gas sector under its Local Content Act. And in a boost to international credibility, Barbados and Jamaica have been removed from the EU's list of high-risk third world countries, easing compliance costs for banks and investors. Barbados will pilot a 2 to 3 billion US dollars debt for resilience swap facility backed by major development banks. The goal, convert debt payments into investment for climate resilience and infrastructure, building on Barbados' 2023 success. Meanwhile, Grenada's collaboration with Bermuda on healthcare credentialing underscores the rise of cross-border service innovation in the region. And finally, the Inter-American Development Bank has raised a record $3 billion US dollars through a 10-year sustainable bond, attracting over $8 billion US dollars in global demand. It's the largest 10-year order book in IDB history and a strong signal of investor confidence in Caribbean-linked development finance. Let's close out this week's Market Watch with a quick look at regional currency movements and the Caribbean stock market. Across the region, the US dollar remains the dominant anchor, but there's considerable variation. One US dollar gets you 131 Asian gourds, 161 Jamaican dollars, or 218 Guyanese dollars. In the Eastern Caribbean, the EC dollar trades at $2.71 to the US dollar, while the Trinidad and Tobago dollar is at $6.80. As the Bahamas explores a shift to a currency basket, regional forex dynamics will be one to watch. It was a mixed week across the regional exchanges. The Jamaica Stock Exchange fell nearly 0.9%, and Trinidad's All TNT Index dipped 0.17%. The Eastern Caribbean Securities Exchange was the lone riser, up 0.75%. Among the top gainers, 138 Student Living rose 13%, and Stanley Motor OS gained over 10%. On the losing end, Salada Foods fell 12%, and AS Bryden and Sons dropped nearly 13%. That's your Market Watch. I am Claudine Lloyd. Stay tuned for Global Pulse next on Caribbean Business Review. Welcome to Global Pulse, your fast-tracked briefing on the world's most pressing economic, trade, and geopolitical developments. I am Claudine Lloyd. The United States is driving a new wave of trade tensions. President Donald Trump confirmed that stiff tariffs ranging from 25 to 40% will hit over 20 countries starting August 1. The list includes Canada, Japan, South Korea, Brazil, South Africa, and several BRICS-aligned economies. A further 10% was threatened on all nations siding with BRICS, adding fuel to an already fractured global trading system. Germany is feeling the heat. Exports to the U.S. plunged 7.7% in May to their lowest since early 2022, dragging overall German exports down 1.4%. Chancellor Merz is now pushing hard for an urgent EU-US agreement before the August 1 tariff deadline. In Canada, there is growing concern on multiple fronts. International student permits have been slashed by more than half, driven by new financial requirements and approval caps. That's a big blow to tuition revenues and innovation pipelines. But on the jobs front, there was an unexpected gain. 83,000 jobs were added in June, driving unemployment down to 6.9%. The rebound dims hope of a near-term rate cut by the Bank of Canada, even as uncertainty with the U.S. deepens. Trump has threatened a 35% tariff on Canadian goods unless a new trade deal is reached by July 21. Canada's services sector, meanwhile, is contracting for a seventh straight month, highlighting pressures from weakening U.S. demand and looming auto and steel tariffs. In China, auto sales surged nearly 19% in June, with new energy vehicles now making up over half of all sales. But regulators are warning of oversupply, slowing demand, and price wars in the EV sector. Tensions with the U.S. continue to escalate. China has warned of retaliation if new U.S. tariffs kick in on August 1. Already, export restrictions on rare earths have forced Nissan to cut EV production, with ripple effects hitting Suzuki as well. Meanwhile, Taiwan's quarter two exports hit a record $154 billion, driven by strong global demand for semiconductors. But Samsung issued a warning of its own. Quarter two profits are expected to plunge 56% as U.S. export controls on AI chips to China hurt its semiconductor division. The oil market is heating up again. OPEC Plus will raise production by over 548,000 barrels per day in August, led by Saudi Arabia and Russia. That's the fourth consecutive monthly increase as demand firms and inventories tighten. But risks to the global supply chain are growing. PwC warns that by 2035, up to one third of copper production tied to chip making could face climate disruption, particularly in Chile, Peru, and the US. Copper is critical for semiconductors, and shortages could repeat the economic damage seen during the COVID era chip crunch. Domestically, Trump's One Big Beautiful Bill is reshaping immigration and remittance. Starting December 31, a 1% remittance tax will apply to non citizens, but bank and card based transfers are exempt, shielding students and workers from higher costs. New immigration fees are also raising access barriers. Visitors now face a $435 visa cost, asylum seekers must pay $1,000, and work permit renewals have jumped to $550. Critics warn these changes will hit Caribbean travel and study plans hard. Meanwhile, the U.S. power grid is under pressure. The PJM interconnection, serving 67 million Americans, is straining under AI driven electricity demand, with some areas seeing summer bills up 20%. Delays in grid upgrades may extend well into the next decade. The UK's public debt has reached 96.4% of GDP and is projected to balloon past 270% by the 2070s. The Office for Budget Responsibility warns that pension spending, climate risks, and cyber threats are all straining fiscal resilience. With GDP contracting for a second straight month, markets now anticipate a Bank of England rate cut in August. To boost sufficiency, the EU will launch a critical chemical alliance to reduce its 80% import dependence on essential industrial inputs. The initiative will include state aid, simplified regulations, and procurement reforms to save over £360 million annually. BlackRock warns that soaring U.S. debt, set to top $54 trillion by 2034, could undermine dollar dominance and accelerate global de-dollarization. Rising interest costs are already eating into fiscal space. And finally, a UNESCO report finds that AI energy use is skyrocketing, doubling every 100 days. Yet up to 90% of that can be saved with smaller, task-specific models and shorter prompts, a call for smarter design as AI reshapes global systems. Before we go, let's take a quick spin through the global markets and energy boards. Oil prices climbed this week on stronger demand signals. WTI crude rose $68.45 US, up nearly 2.8%, while Brent crude hit $70.70 US at 3% gain. But not all benchmarks followed suit. OPEC's basket price slipped 0.92% to US $71.23, and natural gas edged down just under 0.7%, closing at $3.31 US. It was largely a down day on the global stock boards. The Dow Jones lost 279 points, while S&P 500 and Nasdaq dipped modestly. Europe followed suit. Germany's DAX dropped 0.82%, and France's CAC 40 slipped nearly 1%. In Asia, Japan's Nikkei was flat, but Hong Kong's Hang Seng stood out, up 0.46%, gaining over 111 points. That's your Global Pulse. I am Claudine Lloyd, bringing you the global signals that matters to the Caribbean.
Well, that's a wrap, folks. Have to express our profound thanks to Mr. David Mullings, who is Chairman and CEO of Blue Mahoe Holdings, for his intervention this week, because we've been discussing the Caribbean investment landscape and frankly, whether or not we're fit for purpose. And we had some interesting takeaways from the program, I think, what we should look to share. That one, the Caribbean is viewed as the next investment frontier. The perception of risk differs from reality in the Caribbean. Of course, mindset shifts are necessary for market expansion, and that nearshoring presents new opportunities for the Caribbean. In fact, it's a $5 billion industry. And finally, that benchmarking against successful economies is important for growth. So we thank David very much for his intervention this week on the program. Just to remind you that as we close out the program this week, to remind you that a new issue, the new edition of the Caribbean Financial Dispatch is now available. And indeed, we hope that those of you who have subscribed and others would continue to enjoy our offering, as well as continue to invite those who wish to avail themselves of the Caribbean Financial Dispatch to either contact us or go to the website, josephcox.org, and look for the CBR page where you will have access to the newsletter, or you can drop us a line here at the Caribbean Business Review, which is caribbeanbusinessreview@gmail.com. Once you send us a note indicating your interest, then you'll be added to the growing subscription list, and we'll move from that. Ladies and gentlemen, I mean, it has been quite an interesting week, but we have to invite you to like, share, and subscribe to this program as we continue to thank those who have interacted with us, and we invite you to join them on our TikTok channel. We are also on Spotify, where you can listen, you can get the audio of this program. LinkedIn, of course, YouTube, and we're also on MKR Radio, as well as some of the other social media channels, including Instagram and so on. So by and large, as we come to a close for this week's program, I just want to extend my, again, welcome to Claudine Lloyd for joining this platform. And as for the rest of the audience, what I would like to say is I continue to express my profound thanks for your support. And indeed, next week, God's willing, same time, same place, we'll be right back to do it all over again. Until then, I remind you that my name is Joseph Cox, and this has been CBR.